Yo. Alright, thank you guys so much for watching the video. Today's video is going to be over risk management and what type of, what's my position sizing whenever I'm entering a trade and whatnot. Let's get right into it. Alright, so risk management. So I'm gonna be going over two sorts of scenarios here. One is gonna be my normal position size, and my other one will be for passive normal size position sizing. It's gonna be like de-risk and just normal position sizing. So keep in mind, this is my position sizing for an eval stage of like a prop firm. So one tip for trying to get an eval stage passed is you always want to trade a little bit more aggressively, because you just want to get that eval stage over with. Once you move over to like the actual live funded account, that's when you switch your trading style just a lot actually, because you wouldn't want to be risking these type of numbers on a live funded account. So keep in mind, this is a very important thing about this video is that this is just for an eval stage. Alright, and with that, let's get right into it. So for an eval stage, for me, I've always sticked with trading micros. I prefer micros, and if it's the way I trade, because technically one mini is equivalent to 10 micros. So I would rather be able to trade with like 20 micros, right, than compare it to two minis. 20 micros allows me to be able to get in and out of position size or positions easier, and it allows for partials. So my very first trade, right, of any trading day, I'm gonna evaluate, okay, am I going to be trading normal size, or am I gonna be de-risk? And let's just say I'm trading normal size today. So my very first trade, it will be I will always be risking either $480 if the risk to reward is a 1-to-1, or if the risk to reward is a 1 to 1.5 or higher, then I'll be risking $720. And I'll show you guys some examples of that later. But my second trade, right? So let's say I do take a second trade, and I won my first trade. If I win my first trade, then I'll be risking a half of the profits I gained from my first trade on my second trade. So let's say my first trade, I won 500, right? Or I made 500. My second trade, I'll risk half of that, so I'll risk 250. And yeah, essentially this keeps me from blowing my winners, and it allows me to maintain my capital, because capital preservation is the #1 goal in trading. It's not whether you're right or wrong, it's just it allows you to stay in the game. But let's say I lose my first trade, right? If I lose my first trade, my second trade, if I do take it, will be a little bit different. So I'm going to be risking $240 as my maximum stop loss if it's a 1-to-1 risk to reward. But if it's a 1 to 1.5 or higher risk to reward, then 320 will be my maximum stop loss. And yeah, let's say, then like I said, the numbers gradually get smaller as I go from my first to second to third. And yeah, my third trade, let's say I win my second trade, same thing. I'm gonna only be risking half of the profits I gained from my second trade. Like I said, this helps me keep my profits, and because you're never guaranteed any trade. So risk management is going to be extremely important, and it helps you stay in the game. But let's say I lose my second trade too, right? So if I lose my second trade, my maximum stop loss for 1-to-1 risk to reward will be 120. But if it's a 1 to 1.5 or higher risk to reward, then my stop loss will be 160. So those are just like some of the numbers aspect of like the way the way I'm like sizing right here. And keep in mind, this is for an eval stage. This isn't live funded account. Once, like, I'll make a whole separate video for a live funded account, but these numbers are just for an eval stage. The second, some of the 3 points that I do want to make here are, I'm not going to take any models that are a 1-to-1 risk to reward, because that's not, like, you wouldn't want to risk $1 to make 50 cents. That makes no sense. And my risk to reward should always be set to where my first partial is taken, not where my terminus is. So I'll show you guys some examples after this, but yeah. And whenever I'm taking a partial, I always take half of the position size off when I'm doing, normal, when I'm trading normally. So I'll take half of the position size off and I'll move my stops to break even whenever I'm taking my partial. And let's say, for example, I'm taking a original position size of 20, right? If prices takes my first partial, I'll take off 10 there, and then I'm gonna move my stops to break even. And let's say I have extra targets or more targets that I have for prices. Then if prices hits my next TP, then I'll take off 5. And like I said, I'll just gradually take off half and half and half until prices hits my terminus. And this goes back to why I like trading micros. Like I said, you're not able to have this type of flexibility with trading minis. But with micros, it's a lot more fluid, and you have a lot more wiggle room. And yeah, that, if you guys want to take a screenshot, you guys can take a screenshot there. Like I said, this is whenever I'm trading normally, so these numbers might be a little bit larger, and it's also eval stage. And let's get into the actual de-risk conditions. So if market conditions are really poor, then you want to de-risk yourself, and or risk on, actually. De-risk, it should be risk on. Okay, so trading micros passively, the same concept still applies, just the numbers are a little bit different. So I won't go over every single thing here, but like one different aspect of this is here, like the first trade, if the risk to reward is a 1-to-1, right, then your maximum stop loss will be 240 here if you're trading passively. And if it's a 1 to 1.5 or higher risk to reward, then you'll be risking 360. So you can take a look at the numbers yourself here. I'm not going to go over everything, but one crucial thing that's different whenever risk on here is, whenever I do take a partial, I'm going to take off 2/3 of the position size off, because your partial already got taken, and you're trading in poor market conditions already. So your percentage of even actually winning a trade already drops significantly whenever you're trading poor market conditions. And I have a video going over when markets are going to be in poor conditions, and yeah. So you always want to take off 2/3 of your position size whenever your partial is taken, and like always, you want to move your stops to break even. So for example, let's say you have an original position size of 20. You want to take off 13 at the first partial, move your stops to break even. So that means you have about 7 contracts left, right? And you have another take profit that's going to be hit soon. And once it gets taken, you take off 5. That's one of the difference between my normal position sizing and I guess normal way of trading, and then the risk management whenever you're risk on. That's where it gets a little bit different. So I'm gonna go over some trades here. So this is the chart for July 29th, and let's say I actually was thinking about taking this trade here. So here, this is actually based on, I'll tell you guys why I was actually looking at this one. So the reason being I had this trade on here is because I was targeting a 15-minute high as my partial, right? And I wanted prices to attack the 10 o'clock highs here, where we had SMTs, and hopefully July 25th high. And there's believe there was one more confluence, and that is whenever prices came into this 15-minute fair, or not 15-minute, but 4-hour fair value gap. So notice how we tapped into the consequent encroachment of the 4-hour fair value gap, and we had this bullish power of 3, 15-minute power of 3. So on the 3-minute time frame, this is where I got my fair value gap from. The smaller fair value gap supports the idea of us attacking that 15-minute high. So on the 1-minute time frame, I go on in, and then I take my entry actually at 10:45. So we dip into the 3-minute fair value gap at 10:45. So I waited until the candle closed. We tapped into the 3-minute fair value gap, and we take out the 15-minute high. So let's show you guys what the numbers are actually like. So what I would have done here is, since this is a 1 to 1.63 risk to reward, so it's basically I'm risking $1 to make $1.63. So it's above a 1 to 1.5. It's above that. So here I would have been risking 720 if you guys pay attention to my position sizing. So it's above 1.5 risk to reward, right? So I'll be risking 720. So here, let's say I'm gonna create a limit order. I'm risking 720 here. So let's say, I believe it was 27. Yeah, 27. So I'll be risking 27 I'll be trading with 27 contracts here in this particular trade. And my stop loss 702. My take profit is going to be about 1,150. So notice how I set my take profit, or my first partial, at that 15-minute high, and the trade isn't set here. I'm trading within the 15-minute model. I'm not trading, like I said, this is where I can see prices going, but what information is giving me right now, what price is giving me right now, is we're going to probably take out that 15-minute high. So even though I know we have room to go up all the way up here, I'm going to take my partials at that 1.5, and it allows for a more realistic risk to reward, because I'm not trading off of, I'm not going to be, I'm only taking 1 to 2 risk to reward. But here, like I said, it's not, how do I explain this? It's not, I'm not trading based on numbers wise. I'm trading what the markets are giving me. So like I said, I would have taken my first partial at that 15-minute high, and notice how there's another swing high right here. So I would have taken off another partial off here. So my first partial, I'm taking off. If I'm going into this trade with 27 contracts, right, then I take off 13 contracts at my first partial, and that means I would have 27. So I'm 13. Oh, I would have taken off 14. Sorry, I would have taken off 14. So 27 minus 14. You guys can do the math. It's about 27 minus 14. I'll have 13 contracts left. So whenever I take this next partial, take a half of 13. It would have been 6.5 or something like that. Then you just round it up. Then the next partial you take would have been 7 contracts. And there is basically, that's my risk to reward video. If you guys have any more questions or whatnot, you guys can always visit my Discord. It's in my YouTube description. So if you guys want to check that out, you guys can go there. And with that, that's gonna wrap up my risk management video, and I hope this video helped you guys out a lot, and I'll catch you guys later in the next one. Peace out. Yeah.